Are we about to see the end of the no hire, no fire labor market? That's the question we're going to try to answer in this video. While a lot of people right now are focused on inflation, specifically around the Fed's decision-making process for the rest of the year, I decided I wanted to take a look at the second part of the Fed's mandate, which is the labor market. And I found some interesting things specifically in the soft data. So if we're going to talk about the no hire, no fire labor market, what do I mean when I say that? Well, I made an entire video just on this topic a few weeks ago. So I'm going to have a tab pop up as it normally covers my face. So if you want an in-depth coverage on what that means and what that has meant, go check out that video. But just a quick slide here explaining. Basically, we saw a breakdown between hiring and firing, that traditional relationship. Normally, they are related, negatively correlated. So when the hiring rate is going up, it makes sense that businesses aren't laying people off generally at the same time. And then vice versa, right? So if companies are laying people off, so the layoff rate is moving higher, you're generally not expecting that they're also going to be hiring a lot of people. So traditionally, these series have moved together, as you can see from this chart. Well, over the last few years, that has really broken down. So as you can see, the hiring rate has fallen. However, we have not seen an equal fall or any sort of real fall in the layoff rate. So businesses are not hiring new employees. However, they are not laying off their existing employees. In the video that popped up, I went through a bunch of reasons why that could be occurring. So you should check that out if you're interested in learning more. But in this video, we're going to talk about the soft data. What's that saying? Why that's a little bit troubling? What the hard data is saying? And then also what comes next. So I'm going to show you 3 soft data series that I looked at that sort of show health in the labor market. Quick note on the difference between hard data and soft data. Soft data is more volatile. Soft data is survey-based data. It's often asking companies what their plans are. So in this instance, the NFIB Hiring Plans, that's asking small businesses. It's a survey that goes out, I think, every other month. And it asks small businesses of all tons of different questions about how they're feeling and what their plans are for their business. So they're more emotional series. They're more volatile than hard data. And they often move before hard data. So I'll show you charts at the end about what comes next that will show this relationship. Hard data, on the other hand, is observable, measurable, quantifiable data. So things like the unemployment rate, something we actually measure that isn't really based on a given firm's opinion or feeling. So soft data right now is sending a little bit of a troubling picture. So the first series I'm going to show you, the NFIB hiring plans. I smoothed it over 6 months because it's a relatively volatile series, so you can get a better picture of what's going on. And basically what we've seen, and this is going to be a trend that you see throughout this video, this soft data series is down from its post-COVID highs. Okay, so small businesses are pulling back on their hiring plans. Now, again, this isn't super surprising based on the no hire, no fire labor market. But it does generally mean if that traditional relationship was going to hold up, the next step would be potential layoffs. Now, we have not seen that yet, but that does normally come with a slow off in hiring. Next one, similar picture. This is jobs plentiful minus jobs hard to get. So this is based on consumers' answers. So consumers receive this survey and they answer the question. And so think about it, the difference when jobs are plentiful and consumers are feeling good about the economy, that is a positive aspect for the labor market. People are hiring, people are getting jobs, people are getting interviews, etc. When jobs are hard to get, more than they are plentiful, so they're moving down, that means consumers are struggling to find work. And so what we've seen, again, similar to the last one, it is down from its post-COVID highs. So consumers have found that it is harder and harder to get jobs than it was a few years ago. Finally, there's a ton of soft data series I could show you. I just wanted to show you 3. We're going to look at the ISM Manufacturing Report, specifically the employment component. So again, when you're dealing with the ISM, the 50 threshold is the expansion or contraction. And as you can see, the employment part of the report has been in contraction for some time now. Looks like for a few years, judging from this chart. And it has also trended downwards since COVID. So manufacturing firms are not feeling great about the employment picture. So soft data series are starting to show some cracks in the labor market. Is that starting to show up in the hard data? Frankly, no, it has not. Not yet. In fact, if you look at claims, which is what we're going to do here on this slide, they are near some historic lows. So initial claims, this is going to look a little weird because it's the 6-month moving average. So it looks like it's a little higher than it is because it's taking in previous months. However, it is currently right near a 55-year low. So this trouble that we're seeing in the soft data isn't leading to more people initially claiming unemployment. Also, if you look at continuing claims, that number has ticked up again because we've seen hiring slow down. So it's not surprising that as more people initially claim, that continuing claims number is going to start ticking higher. But if you look at the whole history going back to the 1970s, you can see this number is at a historically low level right now. So the labor market, the hard data of the labor market, still looks really good. And we'll look at one more hard data point, which is the unemployment rate, probably the thing that people follow the most. Now, again, similar to continuing claims, yes, the unemployment rate is off of its lows that we saw maybe in 2022, it looks like. However, if you look going all the way back to the 1970s, the unemployment rate is incredibly low right now. We have been sitting under or at full employment for quite some time, for years. So again, while we've started to see a slight tick up in the unemployment rate, it's not anything jarring, and it probably does not line up with the picture that some of the soft data is showing us right now. Now, one potential reason for this is only recently have we seen sort of big rounds of layoffs. So I've grabbed two headlines here. Most notably, I'm sure you've heard about this one. Meta laid off about 10% of its workforce, or 8,000 employees. They blamed it on AI. And then Nike, which has really struggled over the last few years, cut about 1,400 roles a few months ago. Now, all of these layoffs might not be sort of accounted for in some of this hard data yet, specifically when you're talking about Meta. This specific round from Nike probably has, but this could also be the start of a trend, right? A lot of times companies don't want to be the first movers when it comes to cutting a huge part of their workforce because generally it can create some public backlash. But if you're a tech company that's considering laying off people and Meta lays off 10% of their workforce, that could give you the green light to sort of follow suit. You're not going to be the first mover in this area. So we've set up this picture. Soft data is starting to show a little bit of signs that the labor market might be starting to crack, but it has not flown through to hard data quite yet. So where do we stand? Soft data tends to lead hard data by a few months. Now, I want to be clear, there are plenty of times where soft data and hard data do diverge. So this is not sort of an exact science or sort of Bible that you need to follow. However, it is worth following the soft data series because if you look, the NFIB Hiring Plan series that I showed you earlier at the beginning of this video does have a tight relationship with the unemployment rate, inverted in this case. So when the unemployment rate, the red line, is moving down on the chart, that is actually the unemployment rate moving higher. Again, you can see the right axis is reversed. So what does that mean? When small businesses say that they're not going to be hiring as many people in the future, so when the blue line moves lower, the red line 3 months later tends to move down alongside with that series. So again, Right now, the chart doesn't look any sort of crazy type of way that you would expect a big fall in unemployment. However, the point here is that if the NFIB hiring plan series continues to fall, if small businesses continue to pull back on their hiring plans, you would eventually expect that to flow through to the unemployment rate. Finally, last thing, very similar to the last one, it's the jobs easy to get, jobs hard to get series with the unemployment rate. So that same series that I showed you earlier, and this just shows a very similar picture. Now, this series has moved lower a little bit faster than the unemployment rate. So again, you might say, if you're looking at the clip chart here on the right, that there's room for the unemployment rate to move lower. But I would caution you from reading too much into the specific tick for tick movements in any one of these charts. What's more important is if you zoom out and you can see that there is clearly a relationship between the two series. So this is not to say that the next time the unemployment rate comes out, I expect it to be higher. Not what I'm saying at all. I'm just saying it is worth paying attention to and following the soft data series around employment, as they do have a relationship eventually with harder employment data, such as the unemployment rate. So, unfortunately, it's a bit inconclusive. Is the labor market showing signs of deterioration or cracks? Is the no hire, no fire era over? We've seen layoffs from some pretty big firms. Again, I showed you Meta and Nike. The soft data seems to be pointing to something changing. Something doesn't look great. However, we just have not seen the same thing flow through to the hard data. So unfortunately, I would call this inconclusive, but this is something we will be monitoring closely. I hope you enjoyed this video. I hope you learned something new. If you did, if you could take a second to subscribe to the channel, that would be greatly appreciated. We did just break 1,000, which we had a little celebration over here. But thanks for watching. Hope you have a great week, and I'll see you next Monday for another Macro Monday video.